Hello and welcome to Startup Street. I'm Arundhati Ramnin, and with me, as always, are both Ritu Singh and Shruti Mishra. These are the top headlines from the startup world. Fintech Unicorn Bharatpe turns EBITDA positive for the first time. Annualized revenue crosses 1,500 crore rupees, and the company says cash burn has reduced significantly.
Payment solutions provider Phicommerce raises $10 million from BNext and Opus Ventures. The startup plans to use these funds to expand international business and develop payment solutions.
Regional dialect OTT platform Stage raises an undisclosed capital from Olympic gold medalist Neeraj Chopra. With this investment, Chopra also joins the startup's cap table.
Cannabis-focused health tech startup HempStreet gets $1 million in its pre-Series A funding round, led by existing investor Carl Vahin of Vahin Holdings. He will use these funds to expand its product range and increase clinical trials for proprietary formulations.
Rules governing the use of artificial intelligence should support innovation, Google's chief legal officer Kent Walker said, echoing pleas by a wide swath of businesses and tech groups as the European Union races to agree AI rules next month.
A federal judge says former Binance chief Changpeng Zhao must stay in the United States for the time being. This after he pleaded guilty to violating US anti-money laundering laws.
Those are the headlines we've been tracking for you this evening. Fintech Unicorn Bharatpe has turned EBITDA positive in October. Backed by the likes of Peak15 and Tiger Global, the startup saw its annualized revenues grow 31% on a yearly basis. The firm attributes this to the consistent growth it has seen across all of its business verticals, as well as the fact that it was able to significantly cut down its EBITDA burn. Joining us now for a first and exclusive interview are Nalin Negi, the interim CEO and CFO of Bharatpe, and Harshit Sethi, the managing director at Peak15 and board member at Bharatpe. Also joining us is my colleague Ritu. Gentlemen, welcome to Startup Street. Nalin, let me start with you. Bharatpe, like I mentioned earlier, has turned EBITDA positive, and October is its first profitable month. Tell us what led to this. You say you've significantly cut down EBITDA burn. Can you tell us by how much versus 60 crores in FY23?
Yeah. First of all, thanks for having me here. There are a lot of things that we've been doing, and I must say that things have not just been done in the last few months. We've been on it for some time. We looked at all the aspects of the business, and not just any specific product or any specific line in the P&L. We looked at the revenue as to how do we go about increasing the yield on the revenue, and we took some steps to ensure that our revenue yield increases month on month and over a period of time. The second thing that we looked at was our cost of funds. And since we facilitate loans through our NBFC partners, and wherever there is an undeployed capital, how do you reduce that and bring down your cost of capital? The third thing we also worked on is the credit losses expected out of the loans facilitated by us. Here, one of the things that I would like to point out is that merchant lending is a new segment in the country. And what happens is it's still going through its maturity phase, and still a long way to achieve maturity. So we had our own learning out of this, and not just for us, but even for merchants. And we did a lot of work here in terms of underwriting, in terms of selection of merchants, in terms of the criteria that we use for identifying a merchant. So credit loss also was brought down, and similarly, a lot of work done on operating expense line, and these are numerous lines where we worked on. And so while initially our business model on a unit economic basis was negative, we've worked on it to become positive, and now we have a positive business unit economics, and there are still areas to improve. I'm not saying that we've got it all right. There are still to be done. Now all we need to do is to scale up the business.
Well, Nalin, you still haven't given us the numbers. So 60 crores of EBITDA burn per month in FY23. What is the current number? And speaking of more work to be done, what about overall profitability? How soon do you hope to achieve that?
So I would say that we are in early single-digit profitability as of now. And the next goal for us is being consistent in delivering this month on month and then quarter on quarter. And our first goal is, be EBITDA positive for the full quarter and then for the half year. We may not be able to achieve full year EBITDA positive number for the year because we've just done it from October onwards. We definitely look at next financial year to be EBITDA positive and also make inroads towards becoming PBT profitable in the next financial year. But I would say that that's still away and we'll work towards that.
All right. On that note, let me quickly go across to Harshjeet. Harshjeet, Peak 15 doesn't talk about its portfolio companies, but today you make an exception as this is a milestone for BharatPe. Is this a classic case on how investors can work with founders and help build businesses and clean up the noise?
Yeah, I mean, thank you first for having me here. It's certainly been a roller coaster of a journey over the last 2 years. But I'm thrilled with sort of the progress the company's made. I'd say, us and everybody on the board has really been focused on what are the right things we can do to enable the business to succeed long term without focusing on any short term impact. So despite all the noise, I'd say, for us, focus was on a few different fronts. The first was on the team. We feel like we've got significant talent. Nalin has joined us a year and a half ago. And, like him, we have perhaps 5 or 6 other very strong CXOs that have joined the team over the last few years. We've expanded the board. We've added 2 independent directors. We've added Mr. Kanungo, who's the former deputy governor of the RBI, and perhaps the only fintech that has a deputy governor on their board, as well as Mr. Kaushik Datta, who's chairman of the board at Zomato and a longtime PwC partner to, sort of lead our audit committee. And similarly, we've made inroads on making sure we have the right licenses to be able to achieve the progress we'd like to. We've got sort of, we've become promoters of an NBFC. We've received in-principle approval for a PAPG license. And of course, we have a strategic partnership with Unity Small Finance Bank. So I'd say across the board, our focus has been on what are the long-term changes we can do that can help the business sustainably deliver profitable growth. And that's been our focus. And we hope to see that continue.
Okay. Well, Harshjeet, we'll come back to you on that point. But Nalin, your annualized revenues have now crossed 1,500 crores. Will this 30-31% kind of growth rate continue? And what will drive this revenue growth? Whether it is the lending business or the fee business, what sort of growth are you expecting across?
So, first of all, the growth would come initially from the lending business because that's a more matured business compared to other businesses that we have. And for that, we need to grow our network. And as we grow the network, more lending and more loan can be facilitated out of that. Having said that, that's not the only focus for the company. We are working on many other fronts as well. Postpay, which is the consumer offering that we have, was impacted due to changes in the regulation. However, we're working with our partner bank, Unity, and we should be launching a co-branded credit card soon, and that would also help in increasing the revenue. While it's difficult to put whether you'll get a 30-31% revenue growth month on month or on a period, but our endeavor is that we should be growing faster than what we had experienced in the past, because we have the levers now to grow.
Nalin, you've also recorded a monthly TPV of over 14,000 crore rupees across your payments products. What's the outlook for these, between merchant lending, postpay, POS, and Soundbox? What's the revenue mix and which segment is growing the fastest?
So the 14,000 crores TPV that you hear is a combination of, on the network side, the UPI and the POS, both of them together. The consumer TPV is not included in this. Our revenue mix, one way of looking at the revenue mix is in terms of interest and non-interest income, that is 55 to 45, 55 being the interest income. The other way of looking at it is from a business perspective, right now, the network and the merchant lending side is the biggest business, which contributes almost around about close to 60% of the revenue. Around about 15% comes from the consumer side, and the devices business, which is the Soundbox as well as the swipe business, gives around 25% of revenue.
Okay, we have very little time left. So Harshit, quickly coming back to your priorities as a board member, you highlighted several. But, despite all these top-level exits and you've remolded the board, the last CEO, Suhail Samir, left nearly a year ago, and you're still running within interim CEO. So, what is the timeline you're looking at? What is the process where you're at to appoint a full-time CEO for the company to begin with?
Yeah, I'd say, while it's been close to a year, I'd say the first few months post-transition was just making sure that we had the right governance and decision-making frameworks inside the company set. And that's where Nalin stepped up. With respect to the process, we are sort of in advanced stages and we hope to have an announcement to be made soon.
Okay.
It's a decision to take with utmost seriousness because, this is going to be the new leader of the business. And we would like to find somebody that can sort of, make sure that we keep the technology DNA of the company alive while also understanding financial services.
All right, Harshit. So the CEO announcement will happen soon. One quick question, another, if you could answer very quickly. I have to address the elephant in the room. The case with Ashni Grover is dragging on, and this public spat does impact the image of the company, especially since Bharatpe wants to go public. Any possibility of a settlement outside? If you could also share the IPO timeline quickly.
Yeah, our focus is to be IPO ready. I think, IPO timeline will depend on market conditions. And I think, to be IPO ready, we want to make sure we have the right governance framework in place, which is sort of something I hinted at, as well as having sustainable business. So, we hope to be IPO ready soon. And then I think an IPO will depend on market conditions. With respect to sort of, some of the ongoing litigation, our sort of core focus is to protect the company. That's our responsibility as board members, and we will do what it takes to protect the company. And so we have full faith in the judicial system and the cost that it will take.
All right, Harshit and Nalin, we've completely run out of time, but many thanks for joining us on Startup Street and wish you the very best going forward.
Well, moving on, Omnichannel payment solutions provider Phicommerce has raised $10 million in a Series A1 funding round led by Singapore-based BNext. The funding is going to be used towards its expansion in international geographies and development of innovative solutions to enhance the payment ecosystem. Joining us now to talk about this and the work that the company is doing is Jose Patil, the CEO and co-founder of Phicommerce. Also with me is my colleague Arundhati. Jose, thanks very much for your time here. Briefly give us a sense of what you plan to do with this $10 million. Where are you looking to expand? What are these new solutions that you're talking about?
Thanks for having me here. So just to give a quick background, what have we been doing over these years? So as you would have probably been aware, over the last 10 odd years, there's been a huge boom in payments, both in terms of volumes, as well as the different payment mechanisms that have come about, right? So you had cards that were largely on point of sale, then they went online, then you had wallets, then you had QR come in. Today, of course, UPI in India is the biggest in terms of volumes. Now you have biometric, you have face-based payments, you have embedded payments, and we're also talking of invisible payments, right? So with all of these mechanisms, as a business, it becomes extremely difficult if they were to see these payments in silos. And that's what's been happening so far. From a payment processing standpoint, you had payment processors who would look at these payment mechanisms in isolation. And thereby, as a business, you never really had a 360-degree view of the payments that were happening. We, as a company, set about to change that. And over these last few years, have built one of the very rare platforms in the world that truly addresses omnichannel payments. Going forward, we still believe there's a lot of friction, especially from an enterprise level, enterprise perspective, in terms of payment processing. Typically what happens, a payment processor typically handles the payment leg of it, but there's a whole lot of things that are manually done still before the payment happens and after the payment happens. So, and that leads to a lot of friction. We believe that it's the right time to actually develop products and solutions to address the complete leg of payments and thereby bring about the benefits of automation. And this is what we are really focusing on today, to bring about a truly seamless experience for enterprises on the payments collections.
Absolutely.
So really, that's one. So over the next few months, you'll really see us launching newer products to address this particular requirement within the Indian market. Parallelly, what we also, given that we have proven ourselves within the Indian market, we have some large enterprise clients.
Sure.
We
Jose,
intend.
I'm really sorry to cut you here. We will get into your expansion plans as well, but we're running out of time. So if you could quickly tell us, India is a very highly competitive space, especially for the payment space. So what is it that you're doing that is different from other companies? Give us a use case and what's the traction you've been seeing?
Sure. As I said, we are among the very few players in India that give businesses, companies a complete omni-channel experience in payment processing. What this means is today, for lack of having an omni-channel experience, businesses actually miss out on valuable cross-channel insights of their customers. Today, by offering a complete omnichannel, when I say omnichannel, every payment mechanism in the country is supported by us through one consolidated, one integrated platform. What this means is for businesses, they can actually end up giving their consumers greater flexibility in choosing the payment mechanism that they want to use. Also, we are able to enable businesses to connect data across channels. Therefore, they are able to make more data-driven decisions. And lastly, is they are able to also engage with their consumers better. There's a deeper engagement as far as rolling out customer loyalty programs and stuff. Yes.
Jose, we're running out of time, so sorry to interrupt you again, but we have the last 30 seconds. What is the size of your India operations currently in terms of revenue, and by when are you hoping to break even? And where do you stand in the pecking order when it comes to business volumes?
So we hope to be in the top 5 in the coming fiscal. We hope to be in the top 5 in the coming fiscal, and we've set a target of given our base of increasing revenue 2 to 3 times year on year. So that's the target that we've set for ourselves. Going forward, of course, a small bit of it will start coming from international operations as well.
All right, Jose, thank you so much for joining us on the show, but we're completely out of time, but we wish you all the best going forward.
Thanks.
All right, on that note, it's time for us to head into a short break. But coming up, New York-based manufacturing platform Keychain raises $18 million. We'll dive into how they plan to use their funds, companies' key partnerships, and much more on the other side. Stay tuned.
Welcome back. You're still with us on Startup Street. New York-based tech company Keychain has raised $18 million in a seed funding round by Lightspeed Venture Partners with participation from Box Group, a 4Capital, SV Angel, and over 20 consumer packaged goods industry professionals. Now, the startup says its proprietary technology helps retailers and brands quickly identify the best manufacturing partners for consumer goods packaging. Joining us now to discuss this further is Umang Dua, the co-founder of Keychain, and also with me is Shruti. Umang, thank you so much for joining us on Startup Street. Like I just said, Keychain uses AI to help retailers and brands identify best manufacturing partners across the world. Talk to us about how you're doing that and what kind of efficiencies are you bringing into this fragmented industry?
Yeah, thank you for having me. So with Keychain, what we're trying to do is build the first CPG platform for CPG manufacturing, the first global platform. And what that means, to the question you asked, is I think it's important to understand when you walk into a store now, it doesn't matter where you are in the world, and you see anything on a shelf, biscuits, chips, pasta, most of the brands making those products now don't actually have the manufacturing capacity. They don't actually have the factories. And that's the same whether you think about beauty or cosmetics or many other consumer industries. And that's a massive change from the way the world worked a decade ago or 2 decades ago, where they were large CPG players that owned their manufacturers. And so the world has changed tremendously when it comes to CPG manufacturing. There's hundreds of thousands of factories, $3 trillion of consumer products made.
Sure.
And what's not changed is the way these brands or retailers who make products are finding their manufacturers. And that's what Keychain hopes to do. So we're going to be the first place where you can actually come find the correct manufacturer. And you can do this by searching, across your quantity, location, the type of products, the type of manufacturing capacity. And if we're able to do that, the hope is we'll have better products and we'll take out a lot of the time. Right now, it takes months or years for brands to find the right manufacturer, but can you do that in minutes or days? And that's really what Keychain is all about.
All right, Umang, this is Shruti quickly stepping in. If you could talk to us about your partnerships. You currently have select invite-only partners on board, and you plan to open your platform to more retailers and brands next year. Tell us, who are you looking to partner with? Also, you have a network of 10,000 manufacturers. So what has the initial feedback been like?
Yes. So the feedback has been great. Prior to Keychain, me and my co-founder actually worked in a company called Handy, where we worked with a number of large retailers on very different space, on their home services. And so again, with Keychain, we're launching with a couple of the larger retailers, more US focused on the demand side to start. Manufacturing, of course, is global by definition. But as we get closer to launch next year, we'll think about international more seriously and onboarding more retailers. And the reason retail, when I say is important, is because white label as a trend is very powerful. And so earlier you had brands producing products. Increasingly, you have large retailers around the world who have their own branded product. And so one of the first things we're doing is helping these retailers get products to their shelves faster. And then after that, working with some of the larger brands globally.
All right. And you've just raised $18 million. How do you plan to use the funds? How are you going to improve your tech stack at this point to expand?
Yeah, that's a great question. And it really boils down to 3 things. The first is people. The second is the product. And the third is our research capabilities. Like I said, there are hundreds of thousands of manufacturers, and each of these things is getting more complicated today. You've got gluten-free, keto-free, you've got all kinds of combinations of manufacturing. And a big part of the funds actually going into the research is building the right product such that when someone is looking for manufacturing, it's a far better experience than going for a trade show, going through a broker, going through a consultant. And so a key part of that 18 million is actually going into the product and the research that will the technology.
All right, one final question, Umang, before we let you go. Talk to us about the monetization plan. How do you plan to make money? Going forward, Keychain aims to help its partners navigate the entire manufacturing process, from sourcing to terms negotiation, onboarding, compliance, and everything else. What revenue models are you looking at?
So the way we're going to think about is initially it's all about adding value. It's adding value to both sides. And by both sides, people looking to make product. And then on the other side, you've got great manufacturers who are investing in technology and production and helping them better monetize the capacity of the technology they have. As we scale and as we start to add the value to both sides, we will make sure that the folks who are looking, whether it's the retailers who are using enterprise level product and they need integrations and they need onboarding, that's where we look at monetizing. And then on the other side with manufacturers, as we continue to add value to some of our great sort of qualified manufacturers, we look at how we can monetize as we send them more and more volume.
All right, Umang. So a lot of things to look at over there. But thank you so much for joining us on the show today.
Thank you for having me.
Okay, on that note, it's a wrap on this edition of Startup Street. Thanks very much for watching. From Shruti, Arundhati, and me, it's a goodbye.